welcome to the second episode of the Intelligent Automation series. My name is Don Okolie. I work for Genpact UK, and I lead the insurance service line for the UK and Europe. With me today is a distinguished person, and it is Elena Rasa, the Chief Underwriting Officer of Zurich Insurance for Italy. Elena, would you like to introduce yourself and give a bit of your background before we get started?
Sure, thank you, Don. Thanks a lot for having me here. I'm Elena Rasa. I'm currently working for Zurich, Italy, so local company within the Zurich group. In the past, I've been part of groups, large groups, with a group role, which means providing guidelines and things like that. And among these experiences, what I would like to mention is my experience as Chief Data Officer for a large group in Europe, which is, one of my favorite topic. And this is why I'm really glad that I'm here talking around automations and, data analytics and every nice things that we do these days in underwriting.
That's fantastic. Elena, thank you very much. I know it's a very busy period, and we're really grateful for the time you've set out for us today. So without further ado, we'll get started. There are a number of questions that I'll run by you, and I think the first one is around automation. There's a buzzword in every industry around the concept of automation and digitization. I wondered what your thoughts were around why this is relevant at the moment for the insurance industry, and also what guidance would you give in terms of how insurers move forward on this concept?
Yeah, I mean, maybe I should start saying that the insurance market has been stressed by both internal and external tensions, different tensions in the last recent years. Among the internal tension, I should mention cost cutting, exercising, budget restrictions, so not much space for innovation or implementation of new technologies and things like that. Among these tensions, I would also like to mention old style mindsets among the underwriters, the underwriting community overall, and a lot of change management issues I should mention as well. And this goes together with very heavy legacy systems, which make our life even more difficult. Among external tensions, on the other side, of course, the first one would be competitive pressure. For us, there's far too many new competitors and many competitors overall in the marketplace, sometimes playing tough roles, pushing down prices and things like that. Customer behavior keeps changing over time, and this is also an issue because working on statistical modeling and having these changes, we need to be ready to capture those changing and apply them into our decision rules. Technological improvements, for example, how do we make sure that we get in line with those improvements? Fast computers is, good, but you need to learn how to use them. There's a lot of startups going on of any type, new emerging risk. It's also something that we need to keep into consideration. Cyber, for example, is the new emerging risk, especially now that everyone is working from home. Big data from new different devices. And we need to be able to, embed them into our systems. And I would like also to mention regulation, which is very tough on the financial market, insurance market especially, which is really putting a lot of additional pressure on us. Now, going back to the underwriters, the role of the underwriter remain the same, which means that we need to create value for the business, and obviously having toolkits which are able to respond to those triggers, internal and external triggers, will help them to effectively manage the business and enhance their skills. So what we would really like to become is master of many trades, as we like to say, in the marketplace. This is really what we want to do. Now, there are two types of underwriters. One is the desk underwriter, which includes trial functions, data scientists, product proposition people, portfolio management, you know, all the things which allow then the business to be run. And we also have the field underwriter, which are the market-facing people, which means that they have meetings with customers, with intermediaries such as brokers and agents, and obviously they need to have an agile way to work and to meet their expectations. Now, as you see, there are two different toolkits that we need to apply to the different types of underwriters that we work with. However, automation is crucial for both of them. Automation together with data-driven and analytical-driven are really the key to succeed in the marketplace. For the desk underwriting, for example, it's crucial to be able to merge internal and external information, to be able to work with what we call augmented data, and we need to go into something new, which is the artificial intelligence tools, you know, machine learning and all these things that are very well used these days. On the other side, for field, automation of manual processes, making sure that we are able to embed rules and guidelines into the quoting systems is absolutely crucial. They need to have sophisticated pricing tool available for them to meet customer expectations in the best way. But also online policy quoting systems is, you know, essential because this will allow them to issue policy directly, but also having a good risk assessment with the use of technological devices and tools. Now, the desk underwriting toolkit made of automation and analytics capabilities allows the field underwriting toolkit to identify risk better, faster, which in the end means that they can have a better relationship with the intermediaries they make business with, communicate risk appetite in a smooth way, so everyone will understand that. And obviously, as a consequence, write and underwrite business with a profitable view. So that's, you know, covering more or less why automation is so crucial for the underwriting community.
That was so comprehensive, Elena. Thank you very much. There were lots of points you laid out there. I would encourage our listeners to just go over it in small steps because I think you covered holistically the entirety of the underwriting organization. And just to add to, you know, when I was listening to you, I heard buzzwords such as, you know, the Internet of Things, machine learning, augmented data, and it just got me thinking. I guess this suggests that the role of the underwriter as it's traditionally might itself evolve over a period of time. And I guess on the back of that, it actually possibly just attracts new talent into the industry. If those talents just realize that underwriting as a concept is now progressing at digital speed.
Absolutely. I couldn't agree more. And I'm a big fan of pushing then, you know, all the underwriting community beyond what they were doing before. And to be honest with you, we all know that in the insurance market is not very attractive for those type of roles, you know. Getting a data scientist in the insurance sector is not that easy. So you really need to have a very nice proposition to be sold to them. And all these automation, digitalizations, Internet of Things, collection of new data, which, you know, are now huge, big. And good enough, we have speed computers these days, because, you know, I remember when I was young and I had to run frequency model for MTPL, it took me a week to run the results, you know, for providing the right information for tariff within the motor business. Now it takes seconds, which means that they can really investigate every single thing, and that they can really make as many mistakes as they want. So from my point of view, the traditional actuarial function has to evolve, and it is evolving, to be honest with you. So it's actuarial 2.0 right now. And they all go into, you know, this data scientist type of approach more and more, and try to apply different methodologies in the space of machine learning, artificial intelligence, and things like that, which is the only way, because as you said, Internet of Things is providing us a huge amount of information that we need to process, because we need to be on top of what the customers want and how the customer behavior is changing over time. We might talk about telematics, you know, in every space. Domotics is one very nice topic these days, you know, the property, covering the property lines. Also lately, all these, some sort of let's call it telematics for welfare, you know, where people can actually monitor how do they eat, how much they walk, you know, are they exercising enough, you know, all these things. You know, insurance sector needs to take them on board and make sure that we are able to segment the portfolio much better than we did before. And as a consequence, to get the nice proposition for the new people coming in, but also being in line with the evolution of the customer expectations.
I couldn't agree with you more, Elena. I mean, the example I give sometimes is I say just look at banking. There's been such fast evolution that you can do pretty much all your banking activities on a handheld device. Very few people actually go to their branches to speak to their bank managers. And when you look at every walk of life, you see digitization at pace, but you don't necessarily see that within insurance. And I think what you have articulated very clearly is the reason for change, the need for the insurance industry to catch up with other organizations and transform the way they operate. That's very good. Thank you very much. So if we move on to the next question, so this is quite topical at the minute, and this would be, let's talk a bit around COVID. So we know that automation was very important and has been on the agenda of every major organization before COVID struck. I guess the question is, now that we are where we are, from your perspective, how would you say that automation is even now more important than it has ever been? And by automation, I guess it is whether it is process automation or the application of analytics and everything else we've talked about earlier. Is there a greater impetus now because of COVID than there was in the past?
Yeah, absolutely. I mean, a company with a good data-driven mindset and a good preparation of all the necessary toolkits is able to react faster to external challenges, even shocks like the COVID has been. And obviously with all those tools on board, companies are then able to deploy new products and services easily according to the needs. Now, I just want to make an example, which is probably, you know, quite an important one, about the telemedicine app, which has been broadly used over the COVID, where doctors and specialists were able to talk to patients, to customers, to insurance customers, from a virtually, for solving minor medical issues, of course. But the fact of not being able to go to a specialist or a doctor and having this app available for them to solve small little issues was incredibly important for a lot of people. And obviously companies who had those use cases already embedded in their business had a huge impact, a positive impact on customers, and customer will remember lately. COVID then has simply emphasized these points. And it is a fact that this extraordinary situation has disrupted company proportionally to their level of maturity in data analytics, automation, IoT devices. So the full set of toolkits available and their implemented use cases. Companies at a good level of maturity have been able to capture the changes, so the new needs of the customers. And obviously this means that at the end of the day, they will gain an amazing competitive advantage. And there's like this struggle between companies with good use cases in place, good toolkits, which are embedding all these new things, with other companies where there's a struggle in finding investments to go into these use cases. But at the end, the companies that will really get the maximum out of this, I don't want to call it opportunity because it's a complete disaster, but they will be the ones which will be remembered even after the COVID will go away. And all the other companies have only one option: to run fast to make sure that they capture those companies.
I totally understand. I think my perspective, which is aligned to yours, is an insurance company actually reflects the moment of truth for a customer. A customer doesn't ring up an insurance company just to say hello and how are you. Whenever they pick up the phone and they call, it's because they have a problem. So customer experience is very vital. And the examples you've given are examples of when a customer is in need. How does the insurer respond, particularly during COVID? And that ability to harness digital and technology and deliver a service in times of desperation is a big differentiating factor. And that's what the customer will remember, that they got their response in real time as quick as possible because they had an insurer that had embraced digital. And I think that's such a powerful example of yet another need for change. And I'm curious, just from your perspective, when we are out of the woods and when COVID becomes a thing of the past, do you think that insurers will carry on working the way they work today? Or do you think this is a stimulant and a wake-up call for everybody to change?
For sure, the second one that you were mentioning, for sure. So really, the market has split into two: those who were prepared and those who were not. And for those who were not, it was a rush. It was really, making sure that with small little changes, we could actually pick up the others. For sure, companies with intermediaries, agents specifically, made a huge impact on customers because they were really taking care of them. They were calling them up. They were making sure that they were okay. So there were a lot of activities, not necessarily, within the data analytics space. It was more like caring activities, like allowing them not to pay the premium, postponing payments, or having a medical cover, also when they did not have it. Was absolutely crucial for the companies who were not state of the art yet to cope with the lacks which have been created by the COVID experience. So, having a good front end, just to be more practical, if you don't have like agents who take care of you, is absolutely crucial. People could go into it, understand where the status of the policies were. Am I covered for this? Am I not? Where is my claim? How is it going? Things like that, was absolutely important for them to understand and to feel that the insurance company was with them, even in that tight time. And by the way, the agencies were open over the full period, you know, so customers could count on them and ask questions and see whether they could do something around, you know, anything any need they could have, you know. It was absolutely important. So here is really a good mixture between personal and automation, you know, where automation and personal skills match in a perfect way. And, you know, automations is, you know, something good to have, but it just makes our life easier. But on the other side, we cannot forget that we need we're persons, and we need to keep that level of closeness. Do you say closeness? Maybe it's not the English word.
Yes.
With our customers. This is really
Yes.
crucial. So the combination of the two was really, really important for financial sector in that very horrible experience every one of us had.
Fantastic. And you raise a very brilliant point of that interaction between some technology, but also that personal touch. So let me link this to the next question. Let's just look at the customer as an example. And perhaps you could share an example of what good looks like from a customer experience with automation underpinning and supporting this. How does automation improve that customer experience?
I mean, besides the normal front end, which it goes by itself. I mean, it's nice for them to have an app where they can find anything. So, you know, I give that for granted these days. I mean, everyone has to have something like that. But there are also other tools that they could use besides the normal IoT stuff, like telematics, domotics, whatever, bracelet for taking care of their health. If they have an issue, for example, they can rely on video inspection. If they have a new risk coming up, they can also rely on this type of technologies. When they have a claims, for example, for medium enterprises or mid-market space, you know, they can rely on drones to assess how bad the claims is, to get some sort of anticipation of how much the damage is going to be. You know, these things are important for customers and help the intermediaries to create a good relationship with them. And they all come from, you know, having good devices in place which are available for them. This is one side of the story. The other side, which is less visible for the customer, is the way we segment the customer. So, you know, from the amount of data that we have available these days, we know exactly when one customer needs to have human touch, when the customer is ready to buy a specific policy, if the customer is showing symptoms for whatever disease, and we know that because we track the full story, medical history, according to what other customers of the same time had in the past. And we can really, with technology, support them to identify the right track, the right way to proceed, and, you know, push them to see the right doctors or the right people to handle their claims. And this is all done with, you know, automation, data analytics, big data, artificial intelligence, and there's a huge amount of new stuff there just waiting for us. For us, it means that we are able to serve them much better and make them sure that they can have a good service at the end of the day.
Understood. And that perspective is quite in depth in terms of the value a customer gets out of this. So let's look a bit inwards, back into the organization. And let's look at the underwriting community. There is clearly a need for them to adapt, to move to new ways of working. And this is not easy. From your perspective and your experience, what are the nuggets of wisdom you can give in terms of how we support them along that journey so they get to that end state?
That's a very good question, you know. And this is a good question because it goes in hands with all the legacy systems. We do have an old mindset, especially in the traditional business that we manage. But digitalization, automation is a reality that everyone has to face. And this change management is not easy at all. So the good trick is to make sure that, let's call them old style. I'm one of them. I mean, I've been working for the insurance market for 25 years, you know, so I've seen the full, you know, the full trends, the evolutions of everything, you know. Now we're talking about price optimization. We are able to capture the right trade-off between being profitable and keep growing. You know, there's a lot of stuff which are incredibly interesting these days. But the trick is to make sure that they see that automation and technology is not an obstacle. It's an enabler for them to do their business better. You know, especially for low-profile activities. If those low-profile activities, I mean, I'm talking about data management, data collection, DB filling, you know, all these activities have gone because of technology, they find out that they have much more space for serving the customers in a much better way. And their life is much easier because every single one can rely on tools which allow them to be better in assessing the risk, first of all, and serving better the customer in the end. So being faster is really the you know, the tricky word that convinces everyone to come on board, you know. And then the other thing that I like to do is to mix old style with new style, you know, new blood, as we say, you know, people jumping in with experience also from other industries. This is really create a lot of value, and I'm a big fan of it. So I always try to mix them in such a way that, you know, one can, obviously, I mean, we cannot forget the traditional way of dealing with the business. So it's a good mixture when we create this relationship between old style with memories and the new blood with initiatives. You know, the combination of the two is explosive. You know, there's a little bit of, how do you say, you know, there's like a melting, you know, which is a good combination for getting better and better in the marketplace, which is a tough one. It is a very tough one. We have so many triggers. We have natural catastrophes. We have emerging risks. We have cybers. Pandemia. I mean, the pandemia was on top of our pricing activities 25 years ago. And then for some reason it went away. So like that type of risk was not coming out again. I mean, everyone would have hoped so, but it is a reality now. So back again, you know, with the old ways of including contingencies such as a pandemic in the tariff ways of producing prices, you know. So it's a back and forth experience, and the real value is merging the two, melting them together, and making sure that, or even the old generation of underwriters understand how easier their life is going to be if they are able to embrace, how to say that, the new blood coming from even other industries. This is really a value for me.
Elena, that was fantastic. And with your permission, I will coin your phrase and use it myself. And that's the old style with memories and the new style with initiative. I think that phrase says it all. I'm afraid we've run out of time. This was incredibly insightful. And I just want to thank you, Elena, once again, for making yourself available. And I want to thank you for the depth of insights that you've brought to this forum. It's really appreciated. Thank you very much.
Thank you very much, Don. I hope to talk to you very soon, and goodbye, everyone.
Absolutely. All the best. Bye for now.